Alright, hello everyone. Just thought I'd do a quick update video. Haven't done one in a little while. The market's been pretty well following what one of the things we thought might happen. So it's just in a weird spot at the moment. So I thought I'd drop in and give an update. First thing I want to look at was just a lot of people are talking about the halvening and what that's going to do for price and stuff like that. We're about 140 days away from that still, so still a fair way out. Wouldn't get too excited, and just looking back at the last couple, the one in 2016, we saw a pretty good just grind up really, but even the moves before the halvening were retraced quite a bit. So that one, meh, not much to go off there. If we come back into this last one, so after the 2017 peak, obviously we bottomed quite a bit earlier, I think, compared to what we have this time. And we did get a good increase off that bottom, but then we had a pretty decent retracement really right back into, what would that be, about the 618 level, fib level. So, and even then, like it started to pump off that, and it came back. This one here was interesting because it came back after a decent run. Now this point here, this vertical line, is the same distance from that halving, so the May 2020 halving, compared to what we are now from the next one, roughly. So where we were at the same time last time, it was actually a local bottom, or even a fairly macro bottom really, looking at the daily here. Had a bit of a pump, and then it came back down. Now, this was obviously the COVID dip. I'm not expecting anything as nuts as that this time, but it's interesting that we did sort of creep up a bit more, and we did drop, and it looked like it was going to bottom off this 50, the 0.5 fib, and I would have expected it to sort of keep grinding up and across from there, but obviously the macro environment really smashed it. What's the point of all that? Basically, I'm expecting a fair bit more volatility before we actually start this sort of bull run. Right? There's a little fake out here, but putting in this higher low, that was the last time we saw that price, 9,800. So I'd be expecting a few fake outs, quite a bit of volatility before we actually go on a decent bull run. So where are we now? Well, come over here to where we have been lately. That's how close we are to the halving. We've had a pretty good run up here. If we do a fib on this full run so far, you're looking at the 318 is pretty well in line with this level here, which I've had on the charts for a while as a support area through this time, high volume trading area through that drop, and I have a feeling that if we do retrace, that's going to be a pretty key level. Whether it goes further than that or not, I think will depend quite a bit on the macro story at the time. But look, there is a chance we could come down into the 27s and even around that 24 level to find support again before another leg up. The interesting thing, though, is what's going to happen between now and the end of the year, because realistically, we haven't come back down to the level I thought we might yet. So I was thinking we'd at least come back down to this 382 level, so about 33,300. That's still in play, but this grind up, it isn't unheard of to have a grind up like this into the end of the year. So I would still expect us to come back down into this level here if we do have a decent retrace. I'm expecting it in around this level. Number of different reasons. One, you've got, this will be an area of support, I'd say. You got vector candle there, which, you know, your 618 or in between the 0.5 and the 618 would be the recovery of that candle. But there's some dirty big candles here too that I'm kind of expecting them to come back into before we see another bull run. It's not 100% necessary. There are a few sitting in around here, so interesting to see how it goes. But long term, look, the markets in general, just go to the Nasdaq, it's made a new high. Just looking at these indicators here, volatility is dropping a bit at the moment. The TTM indicator is still heading up. Nadia Watson is still heading up. Stochastic momentum is still in the extremes, but it is starting to head down. What's that? That's the ADX indicator. That's heading up still. So probably a little bit choppy here. We might go sort of sideways for a little bit. Wouldn't surprise me if we go sideways, sort of consolidate a little bit, the momentum comes down a bit, and then we actually have another push up into the end of the year, potentially into the start of next year, which may actually put us into new all-time highs. Now, in a previous video, I talked more about what a blow-off top, what a bubble popping looks like. This, even if this goes to a new all-time high, so did Bitcoin in the last bull run. Even though the volumes weren't there, nothing was the same in that second peak. But typically, if you look at, I guess, blow-off tops and things like that, bubbles popping in markets, it tends to be a double peak, right? I think the main one I was looking at was this one here. So this was the 2020 dot-com boom crash, another run up, and then it just fell away. So looking very similar to that at the moment. When it happens, how it happens, God knows. There's still a fair chunk of liquidity being pushed into the markets by the Federal Reserves around the world, and some Feds have already started dropping their rates. So a little bit concerning that something's broken out there already. Let's see if I can add this actually. Okay, so this is the basically the global liquidity that's out there, injected by the Federal Reserves. Take a measure of that anyway. And as you can see, most of these run-ups, let's actually compare that, to the Nasdaq. as you can see, there's a fair bit of confluence. Can't change the scale. So most of the time, if we're seeing run-ups at the moment, it's because the Fed's putting money into the system through various means. It's not necessarily the most visible ways that they're doing it, but generally this indicator shows you they are. And it's a pretty good lead indicator in a lot of cases for the markets dropping off and things like that. But at the same time, if there's something broken in the system and it actually breaks and it comes to light, then you'll actually see this head up and the general stock market head down. So it's just out of interest. It shows there probably is something broken. So I'm expecting this to be kind of not a fake rally, but a rally that doesn't necessarily just lead to us going up and to the right for the next couple of years. In saying that, one interesting thing I'm considering, if things break, they're either going to break in the first quarter, maybe the first half of next year, I think, just based on all the things that I'm looking at. There is, however, a chance that the Fed can pump money in at the right times in the right ways to keep the market buoyant, in which case this could actually go on for 2 years or more. And just imagine if this goes on for 2 years, the Fed just keeps kicking the can down the road, and then the whole thing shits itself at the same time Bitcoin is peaking, at which point you'd be looking at it going, whoa, that could be the next time that Bitcoin sees its peak, and then the whole market just shits the bed. Bitcoin goes down with it. That is a possibility, in which case we should see a pretty good bull run over the next 2 years. Otherwise, I'd be expecting a sharp dip in both Bitcoin and the general markets, and then we head back up, and then Bitcoin will get a bit of momentum up because chances are the Fed's going to be pumping money into the system. There's going to be stimulus and all that sort of stuff to try and reduce the pain. Maybe, not necessarily, but maybe. Depends how broken things are. And yeah, then we'll see a pretty good bull run, and then it'll just be the general market cycles that you would expect to see Bitcoin top out and come back down again. So anyway, it's obviously not super decisive, longer time frames, but that's kind of the things that I would be looking at, things that I'm expecting to kind of happen. So do we get a pullback here? Maybe. I mean, as I said, all the daily indicators are kind of peaking out at the moment, coming down. So all I can say is maybe. It's pointing towards that being likely. How fast or slow it is, we'll have to wait and see. But at the same time, it's probably going to be doing the same thing in normal markets. So just keep an eye on both and see which one's leading the way. If the normal market drops, expect Bitcoin to drop, and vice versa, actually. Bitcoin's kind of been leading the general market over the last few months. So yeah, not a lot to go on the higher term time frames. Just looking at the 4 hour. Seeing a lot of sort of vector action going on at the tops here, not a lot at the bottoms. So I think they're building their shorts at the moment. Have to wait and see, but yeah, there's a few levels down here that I'd be expecting to see them come into as a minimum, at least that. Have to wait and see. go down to the alley sideways over the weekend for the US Thanksgiving holiday. Yeah, it's looking like there's some downside likely in the near term. TTM is going up. Stochastic momentum has a bit of room to move. But yeah, there's no real reason why I would see this stopping here at this stage. Decent pullback, but no new high. So I'm expecting a little bit more downside over the coming probably week or two. It'll probably be mid-December. We'll probably see a run up towards the upside towards the end of the year. At which point, 48k is still on my radar for BTC before we get a major dip, either before or after the halving. There doesn't seem to be any real rhyme or reason as to when the dip is around the halving either. Sometimes there's a decent dip after the halving, sometimes it just keeps going after it. So, but generally that will see a pretty big dip before it. All right, yeah, that's all I was looking at. Just wanted to update everyone.